Hello everyone, I'm Jason the Wizard of Ops. In this video, I will discuss the new and improved 3D volatility plane. By incorporating a visual of dealer positioning as it relates to current implied volatility, this widget has a lot of helpful information, particularly for an intermediate to advanced options trader. The 3D vol plane is available in Volland Insight, Volland Universe, and Volland Institutional tiers. First, let's discuss the dots. Instead of interpolating implied volatility for strikes that don't exist, we decided to use single points to display the fixed price volatility of each option. The three dimensions shown are option strike on the x-axis, days until expiration on the y-axis, and the implied volatility value on the z-axis. By hovering over a dot, you will see a tooltip that will show you the value of all three axes. By left-clicking on the vol plane and dragging it, you could rotate the whole chart to get the exact perspective you are looking for. When you hover over the vol plane and use the scroll wheel, the whole vol plane will zoom. Scrolling the wheel up will zoom in, and scrolling down zooms out. When we added this widget, we had several choices of what we wanted to show. Your first choice is what ticker you want to see. The 3D volatility plane is available for all 1,000 tickers we have to provide. The second choice is what Greek you want to see the dealer exposure in. The Greeks are shown through the coloring of the dots in the volatility plane. The next choice is whether you want to see the absolute Greek exposure at each strike, essentially showing all single expiration exposure charts at the same time, or if you want to see the relative change in value of each option Greek from yesterday's close. The final decision changes the scope of expirations you wish to view at the same time. This can make the picture more clear for analysis. The whole plane is heat mapped to reflect your decisions of how to display the Greeks. The range of each Greek is colored relative to the highest and lowest value in the chart from your selections. There are several analyses that are made much easier from using the 3D vol plane. The first is a 3D analysis of skew. If there is an expiration that has a different skew or implied volatility level, typically from an upcoming and known catalyst, you can identify this difference through concurrent skew curves. This video was made during earnings season, so we could see examples of this in some individual stocks that have earnings coming up. This is Microsoft. You could see that the relative value of implied volatility and even the steepness of skew are different based on when earnings are. As of this filming, it appears that earnings are between 13 days till expiration and 20 days until expiration. However, Nvidia, who usually has later earnings, you can see that there is no strong change in skew. Another analysis is seeing the relative changes in Greeks from the day before, which will show how strong hedging is in each option for the desired Greek at the same time. By using relative delta changes here in Microsoft, I could see that there were strong declines in delta on the 6 data expiration curve in Microsoft. Over here, you could see that delta had declined dramatically, likely because dealers are short calls above the strike. If they are short calls and the price ran up, or implied volatility increased, then you will see these large declines in delta. A large decline in delta would imply that dealers would have had to buy a lot of deltas in order to remain risk neutral to direction. Therefore, it's probably a good assumption that Microsoft had a large upswing from yesterday's session. You can also use this widget to see which expirations, and more specifically options, are the most sensitive to option pricing variables, such as this one. If I look at absolute delta, I know that the near-term options at the lowest point in delta here between 500 and 475 are fairly sensitive to any kind of changes in price. But more sensitive would be these strong out-of-the-money options in calls, and this one in particular at 450 on puts. It would appear, judging by this, that from 6 days to expiration, dealers are short both calls and puts in Microsoft. Finally, you could do some key skew analysis on each underlying. For instance, you could see if higher Vanna exposure below price should result in lower skew in the near term, because dealers would be short options below price, and that would be wanting to incentivize option purchases. Over here, over the next 6 days, you can see some high positive strikes on OPEX right near price. We can look at skew right here and see that skew is actually priced higher than for the days afterward, which do not have as strong pricing for Vanna. In this way, you can see if skew is over or underpriced. Thank you for watching, and may Volland help you in all your future trading ventures.